So, dear students, so today let's discuss activity 2.3. So, this is question related to Catherine Cook's book. Joseph has started trading as a wholesaler and unsure about what accounting records he should maintain. He has asked the following questions. Why can I not record sales and purchases in the same account as they are in the same goods? So, what would be the answer for this? Sales is a revenue and the goods go out when we sell. Similarly, when we purchase, they are forming part of expenses, so they are forming part of cost of goods sold. So the transactions, very nature of sale and purchase is different. The nature of sale is revenue and purchase is an expense. Even though they are the same goods, according to disclosure concept, we are not supposed to net off sales against purchases because when we sell the goods go out and when we purchase the goods come in. Similarly, sales is a revenue and purchases is an expense. So why can I not use one account for carriage? So there are two types of carriages. One is carriage inward and one is carriage outward. Carriage inward is when we purchase goods, at that time we incur carriage inwards, which forms part of cost of goods sold or cost of sales. Whereas there is another type of carriage, that is carriage outwards. That is when we sell the goods, we pay for the transportation of goods from the premises to some other locality. So we are moving the finished goods from one place to another place. So both are different and the nature is different. Even though they are expenses, but these are forming part of cost of sales, and these are not. These are forming part of profit and loss account. So carriage inward is forming part of cost of sales, whereas carriage outward is forming part of statement of profit and loss. So why do we have to keep a separate account for each credit supplier? So is a credit supplier? A credit supplier is a person from whom the business buys goods on credit. So we need to maintain ledger of different people separately, credit suppliers separately, because the money we owe to them may be different, and similarly the discount may be different, the transactions may be at different dates, the due money may be at different dates. So to keep a track of the money that is due to each supplier, so that everything is clear, we need to maintain separate account for each credit supplier. So this is what you have to write. Please write in your own words, and you can just revert. You can write an email in the same way. So, dear friends, let's discuss activity 2.4 now. So, copy the table and write the name of the account to be debited and name of the account to be credited for each transaction. So, bought machinery and paid by check. So, what's happening? Machinery account is receiving. So, machinery account is receiving, or in other words, machinery is coming into the business. So, we can say that way also. Or machinery account is receiving. So, machinery account will be debited. So, what will be debited? Machinery account will be debited. Machinery account will be debited, and which account will be credited? Obviously, who is giving it? Bank. Check means bank. So money is going out from bank, or who is the giver? Bank is the giver. Check is nothing but bank. Bank is the giver. Bank is the giver. Next. Repaid money borrowed from QQ loan by bank transfer. So what is happening again? Money is going out from bank and you are paying QQ loan. So who is receiving? QQ loans is receiving. So the person QQ loan account is receiving. So QQ loans. Loans is the receiver. So who is giving? Bank. Money is going out from bank, or who is giving? Who is the giver? Bank is the giver. Next, paid for stationery in cash. So stationery is receiving, and cash is giving. Stationery and cash. So stationery and cash is giving. So received commission in cash for work done for another business. So what is receiving? Cash is receiving. Cash is receiving. And who is the giver? Who is giving? Commission is being given. Commission is giving. So commission. So the owner of business took money from business bank account for their own use. So who is receiving? Business drawing. So who is giving? Business bank account. So bank. So next, the owner of the business took unused office equipment from the business for personal use. So what is happening again? Drawing, because who is taking? The owner. The owner is taking away. So what is he taking? He is taking office equipment. Office equipment. So that's it. So the first one is machinery. So if it's not clear, you can just see machinery. What will be created? Bank will be created. Look, QQ loans will be debited and bank will be credited for the second entry. So this is activity 2.4.